Hi, Elizabeth. Thank you for joining this podcast with me.
Yeah, thanks, Nicole. Thanks for having me.
Of course, of course. Okay, so to kick it off for the people who might not know you or Hustle Fund, tell us about your background and a little bit about Hustle Fund.
Yeah, so a quick background on myself. I grew up in the San Francisco Bay Area and, just dating myself here, that was during the dot-com boom in the 90s. So that's actually how I got into startups in the first place. My parents or my family, they were not in tech, they were not in startups. So really, I learned all of this just by kind of being in this place. Fast forward a lot of years, I went to work at big tech, and in late 2008, I left my cushy job at Google at probably the worst time possible. And I decided I wanted to build a startup. And I also had no idea what I was doing. So we couldn't raise any money, but it was a good thing because I spent basically the next year and a half or 2 years or thereabouts just trying to figure out, how do you build a startup? What is important? How do you do customer acquisition? All that stuff. I mean, lean startup as a philosophy was not even around back then. That's how back in the days things were. And so anyway, I've spent most of my career as an entrepreneur at this point. Many years later, that company was acquired by a much larger ad tech company. This was in the advertising space. And in 2014, and after that, I started doing some light angel investing. I was mentoring some friends' companies, basically trying to help people not make the same mistakes that I did. And I started blogging as a result of that, I think partly because I felt like I had gotten some really hard lessons, learned the hard way when I was building my company. And I felt like, gosh, some of these things just feel so obvious that they should just be a blog post and people should just not have to waste months of their lives on these issues. So that's kind of how I got into sort of where we are today. Fast forward even more, I eventually took a formal role at 500 Startups where I ran their accelerator program and did more of that, invested in many more companies, mentored more companies, and left in 2017 to start Hustle Fund. And we're a very early stage VC firm. We invest at, sort of the two people in a garage type of stage.
And one of the partners actually does work out of a garage, right? Eric does work out of a garage.
It is a real garage.
It's a real garage. I love that. Okay, cool. Well, obviously, this is a media mastermind season. And so if you don't follow Elizabeth, you should on Twitter. You have over 115,000 followers on Twitter now. And I believe, if my research is correct, you only had 2,000 at the top of 2019. So over the course of 3 to 4 years, you've amassed this huge following. And I think I started following you 2 years ago when you were at like 50 or something. So you've really skyrocketed. And I guess the question I have for you to start is, did having a media presence, or the partners or Hustle Fund in general having a big media presence, help with standing up the fund itself?
Oh, 100%. Having a big media presence has helped with so many things. I think, so back up to like, why are we even doing this? Like, why even be on the internet out there? I think for Twitter, as you astutely noticed, Nicole, like, I wasn't really active on Twitter when we started this firm. I mean, I've had an account for a very long time, but it was largely, I'd say, dormant. And then one thing that we noticed from doing just a little bit of tweeting, we noticed that when people would apply to Hustle Fund and we asked them, oh, how did you hear about us? Over half the people cited Twitter, which was mind-blowing to me because we were not even really that active on Twitter. So we started thinking, well, kind of like how a startup might, like in analyzing your analytics, if this is where people are coming from, then kind of like any other customer acquisition process, this is where we should double down. So that's why we decided to really go all in on Twitter, kind of from that discovery point onwards. And so I think the first thing that it contributed to was just more deal flow. And I don't think it's necessarily, lots of founders are just browsing Twitter and reading Twitter and, oh, we found you and now we're applying. It was a couple fold. I think one is that, but the other is you're top of mind for other founders, other VCs who already know you, but they have a friend. Everybody's got a friend who's starting a business, right? And they're like, oh, maybe I should send them to Hustle Fund as well. So that's, I think, the other thing that contributed to the increase in deal flow from Twitter. And then as sort of a byproduct, we had never planned for this. We eventually started getting LPs off of that. People started cold emailing me saying, hey, I've been following you on Twitter for a couple of years now. And, your mission or something about what you wrote about here or whatever resonates. I want to see if we can invest in Hustle Fund. And that surprised me. I didn't realize that LPs are reading Twitter, but now it's like, oh gosh, my LPs are reading my Twitter. Can't get too weird with the hippos. So yes, definitely.
Awesome. And I guess I'm curious, did the content that you started sharing from the beginning shift over time to what you share now? I guess you mentioned LPs coming in as well from Twitter. Did you start to shift your content at all?
Not really. I mean, I would say compared to when I first got on the platform in, 2008, 2009, and 2010, that era, I might have posted more about like the donuts I was eating. Now I don't post like that anymore. And we're a little bit more polished in that we try not to go off track and into other swim lanes that either we know nothing about or, that might get us in trouble for ABC reasons. We just stick with startup topics now. But within that category, there's a huge range from how do you angel invest in a startup to how do you build a startup or raise money for a startup or whatever. All of that we've always more or less posted about since, 2018, 2019.
Yeah. And I admire you all though, because you don't take yourselves too seriously either. And so you are very jokey on there along with all of the amazing topics that you share. And so it's a good balance for sure. And I mean, your handle in and of itself, which we'll get to later. I guess I'm curious on the LP side of things. Obviously, in the market, there's a debate on whether VCs should have a huge media presence, if it's part of the strategy. Obviously, Harlem Capital has a big media presence. Everybody on our team has their own lane that they sort of operate in. And we use it as a strategy, right? A distribution strategy, whatever it is. And obviously, that's a contentious point in the market. And so I'm curious, how have LPs responded generally? Obviously, some are positive because they found you through media. But I'm curious, what has overall sentiment been, and has it changed from fund to fund?
I think it's interesting because I see mostly a self-selected group of people. Nobody writes to me and says, I hate your media presence, so I'm definitely not investing. Yeah. So in that sense, it's a little bit hard to tell, whether more people fall into the category of, oh, we like it or we hate it or whatever. We just don't hear from the people who hate it. But I actually think that's a good thing. I think that anybody who is signing up to be an LP in our fund, they should know exactly what they're getting, what kind of people we are. And if they don't like that, then it's great. They learn that and they move on, and we don't have issues over the course of the next 10 years. And to that end, actually, I feel very lucky. We do have a lot of LPs, and we have not, for the most part, had any issues because people know exactly what they're getting. I do think, though, regarding marketing in general, whether it's through Twitter or other mechanisms, I think it's so important for VCs because at the end of the day, money is a commodity. My money is as good as anybody else's money out there. So why should a founder take my money? And, there are things that VCs can do to try to differentiate themselves. But one of those things is media. And we can talk about what that means exactly. I don't think it necessarily has to be Twitter. I have other, fund manager friends who are much lower profile in the broad sense, but they are specialists in, let's say fintech or something very specific. And those are the kinds of founders they're attracting. And that's what their fund solely focuses on. And I think that works just as well. But everybody's got to be, quote, a thought leader on some platform or channel or another, just like how founders have to think about their customer acquisition. I think VCs do too.
Totally. Completely agree. And I think you touched on my next question here, which is, how do you think about I guess, your media strategy, but also for your portfolio companies, their media strategy. And I think particularly at the pre-seed, because I do think it's different for a pre-seed company or a VC that focuses on pre-seed versus someone who operates in the later stage market. But I think you touched on something here where it's like, what platforms or channels do you use? How do you go about recommending a strategy, if at all?
I think, certainly a number of our founders ask me about customer acquisition, in part because I've gone through, the school of hard knocks with my own startup previously and trying to get customers. And getting customers is really hard for everybody, but also in part because we have built up some level of an audience with Hustle Fund. And there are a number of our portfolio founders now who do use the same strategy that we do. You may see some of those founders very active on Twitter, and they basically have just replicated that playbook. And I would say that playbook is very simple. It's basically just tweet a lot about like whatever thing it is that you are trying to be a thought leader in. That's it. And some tweets will resonate, most will not. But the ones that do resonate will get you those followers. And so it's a little bit like there's power law in marketing as well. If you just keep on taking your shot, then you will hit. And it's a matter of just that consistency to keep taking shots and that frequency, and eventually it goes somewhere. But not everyone has the prioritization to do it. But, some of our founders do that now. Another thing that this has led to is we have now started promoting some of our startups through our channels. So we'll write about them through our newsletter, primarily through our newsletter, but sometimes through Twitter as well. More often than not, we'll retweet their stuff, which is really easy for us. And through these channels, we've been able to get some customers for our portfolio founders. I wouldn't say that's a concerted strategy. That's not very repeatable for us to, keep promoting the same company over and over and get more customers, but it's something. And for an early stage startup, it can be helpful to get a couple of extra pieces of feedback from a prospective customer.
Sure. And do you have a strategy around, I guess you mentioned maybe that you don't, but you don't announce all of your investments. I guess the pre-seed, you write a lot of checks, right? So you probably couldn't announce all of them. But is there any strategy internally around which ones you publicize?
It's a great question because the answer is no, but it's something we've sort of batted around, but just hasn't, been a priority for us to kind of, create a calendar around who we're promoting and when. But I think for, a firm that does way fewer investments, such as Harlem or others, like I think it could be a great strategy. I mean, for us, like we even struggle to, because we invest in companies every week. So if we were to even keep a website up to date of the list of companies we have, that would be a full-time job in itself. So we don't even do that. We publish all the companies we've invested in after we're done with the fund, because we know, okay, we did this many investments, up you go. And we only have to do that once a fund. But no, we don't have a strategy.
No initial investments. I guess the follow-on question to that is, do you have a strategy around companies who move on to sort of the next stage, or like a strategy around marketing for companies that maybe you're not initial investment because they're too early, but as they start moving through sort of the funnel?
We do tend to get a little bit more involved with our startups that have, call it, graduated out of pre-seed. And typically I would say that starts to happen around, call it Series A, where, okay, it's very clear this is a product that people want and are willing to pay for and have some repeatability. And so it makes a lot more sense then to push those kinds of companies either through our channels, helping people get intros to press, etc. I think that, in terms of utilizing people's founders' resources, and by that I mean, every founder, of course, wants more customers and everybody wants to make a big splash. But I actually think philosophically that isn't the right approach for most founders, or shouldn't be, because you kind of want to save those bullets for when you really have something that is working. And in the beginning, it's all an experiment. In the beginning, you're trying to get a few customers, get a sense of pricing, whether they even like this, are they retained? And then, okay, can you get a few more customers and improve on that experience? You actually want to do things probably in smaller batches, and you don't want that big bam, because if you don't have your product right, or if you haven't quite nailed the value proposition, you've just like wasted that promotion opportunity. So only when you have kind of those pieces together that I truly believe, all right, let's go out and like push an offering. But I think shy of that, people should be not quite operating in stealth, but, you know, operating pretty heads down.
I agree. I think also there is an element where you just oversaturate the market, right? Ultimately, if your name keeps coming up and coming up and coming up, people start to glaze over it, right? So I kind of agree with you, right? When you're in the testing phase, save the marketing, right? Save the eyeballs and the attention until you hit something. I guess the question also off of that is, how do you think about media as a go-to-market strategy for companies, right? I do think that there is a balance, right? You don't want to oversaturate the market. But I do think that there is an element where you should prioritize it just like any other strategy to gain customers. And so do you have any view on sort of the time ROI that goes into it for founders? Do you think it's something that they should focus on from the get-go, or should they focus on other sort of customer acquisition channels?
I think it really depends a lot on the startup. I'm kind of two minds. So one, I think as a long-term bet, it's good to build, call it an audience through media. And that starts on day one, right? And then over the next several years, then you'll be able to build something incredible. So I do think starting that earlier than later is helpful for startups just because of that cycle. But the problem is people often need customers and feedback today. And if you don't have anyone yet in your audience, then that's really hard to get, because you're spending a lot of time building this audience that you don't quite have. It's even hard to get a few people in that audience on day one. So I generally believe that actually cold email, or, you know, just tapping friends or friends of friends, is a good strategy to quickly get people to test out your product, get feedback, test out the pricing, et cetera, do customer development with. So those are two very different strategies. And so I think that the trouble with startups is there's never enough time to do everything. In an ideal world, they're doing both. But I think in reality, you have to kind of focus on the first rung of the ladder, which is, all right, this is our hypothesis around the value proposition, what we're trying to solve here, and what we think the solution is. We just need to, as grassroots as possible, try to get a handful of people in this funnel and try to charge them and see if they like it, etc. Go back to the drawing board, find another handful of people, and do whatever it takes to get that. And that usually isn't building a media offering. I think at some point when the ship stabilizes, then you start to do that, but that might not be until year 1, 2, or 3.
Yep. So go through private channels to make it more targeted, to test out those hypotheses, and then think about the audience, because inevitably audience is usually quantity over quality for the most part, right? And it has its advantages, but
yeah, the other thing is the high touch aspect. I think, you know, in the beginning, most products are pretty awful, or the value proposition is not quite right. And so what you don't want to happen is like send out something to your newsletter and then it's crickets because something didn't resonate, but you don't know what that is. By having that higher touch, even if cold email isn't going to be a scalable strategy for ABC reasons, you can at least talk to the person and find out what are all the issues that they have with whatever it is and fix those.
Definitely. And I think what people don't talk about with sort of media, which is on the quantity side, is even if you're able to get some level of engagement and feedback from that audience, you need infrastructure to be able to deal with the inbound internally, right? So it's like one thing to build audience, and I'm sure that you have this as well at Hustle Fund or your own channels, is like the inbound that you get from that audience is something that has to be managed as well. So how do you sift through that and get that time ROI to make sure you're getting the insights that you need? If you're more targeted in the private, like sending cold emails, you don't have to have that infrastructure internally per se. So that's something else.
Right. And you also have more control over, you know, whether the customer persona is really who you were going for. Like there are a whole bunch of people in my newsletter who are probably not even in startups as well. And so if you're a company building your newsletter, you're probably going to get a bunch of people from all areas. And if you're trying to go after a very targeted customer persona, those people may or may not be on your newsletter, or there may not be as many of them as you might think.
Totally, totally. And I guess for people who are wondering who has successfully utilized media, right? If they choose to go that route, who has successfully utilized media to their advantage? I know that you have previously tweeted about some people who have done this, not only on the founder side, but also on the VC side. So I'm curious, who would you point to if a founder was looking for a case study in this, or a VC was looking for a case study in this?
I think one of the OG VCs who's done this really well is Jason Lemkin with SaaStr. And, SaaStr, they have now 3 huge conferences a year. I don't know how many people go to each one, but probably tens of thousands, if not closer to 100,000 people now. They've got a huge newsletter list, a huge website community, etc. But even when he started the fund, the following was already huge. There were not as many people, but it was still on the order of hundreds of thousands of people within that community. And it's targeted enough, like SaaS founders. And so it was an incredible source of deal flow for him. And that was, his initial fund was quite successful. And obviously now there are some newer voices that have huge followings as well and have recently started funds. Harry Stebbings comes to mind. Packy McCormick has started his newsletter more recently. I think I would even put Turner Novak in that category with his social memes, right? So these folks have also, I think it's like just a more common strategy now, whatever channel it is.
Sure. Yeah, no, absolutely. And I think that the pipeline from media to raising a VC fund is actually, it's pretty good if you build the right audience. And I guess just out of curiosity, I know we're backtracking a bit. Do you find that you find a lot of direct deal flow from media, or proprietary deal flow, I guess I should say, right? Because of course, capital is a commodity, as you mentioned. Would you say that media has gotten you that proprietary deal flow that every VC is sort of looking for?
I don't know. If I would say any deal is proprietary these days. I think there are 2 things though. One is at the stage where we're in, founders are not necessarily familiar with who is in this startup ecosystem, right? Like if you think about the journey, people maybe quit their job, which is something completely different. And now they're trying to learn about, how can I raise money? Who funds startups? Most people don't know who that is. So they have to learn from scratch. And if your name is one of the first to come up, and we're not going to be the only ones, but if you're in sort of that handful, then that's great. I wouldn't call it proprietary, but that's like early discovery, and that's a helpful edge. And I think that is part of the reason we have done this, because we know there are so many founders out there who are not in the startup scene. They're not serial entrepreneurs. Most of the founders we back are not serial entrepreneurs. So we want people to know about us if you are halfway around the world and you just quit your job and now you're trying to figure out who funds that stage. That's being there in the discovery period, I think, is important at this pre-seed stage. Obviously, it's different if you're a later stage VC. So there's that. And then the other thing is there are people who have read our stuff for a while and then have decided, I really like these people, or something from having read them, would love to approach them. I do actually think likability in VC matters a lot. It's weird. People talk about value add of like, I know this and I know that, and I'm well connected or whatever. Honestly, likability is probably top of the list. Nobody wants to work with an asshole, and this, and so you since you're working with both founders and VCs for 10 years, you want to work with somebody you like. And if you can get to know somebody sort of through media, then that's helpful.
Yeah, at the end of the day, it's a people's business. I think especially at the early stage where both of us operate, even more so at the pre-seed, right? Because you're going off of ideas, right? So it's ultimately investing in people at the end of the day. And I was actually at a conference and someone mentioned that media helps because you get this false sense of closeness with somebody, right? So it's if you walk into a room, somebody has read your tweets for years, even if you've never met, that person thinks that they know you, right? And so you're more approachable, right? The conversation is easier. You have something to go, like baseline knowledge of each other, or at least one-sided, right? And so it's true, it does help. But I think another quote or something that I live by for media is like, VC is sort of like a networking game in a lot of ways, right? And that like you have to sort of be in the scene to be able to know that even Hustle Fund has a pitch form, right? To know where to look for fundraising or customer intros or you name it, talent intros. And for me, it's like you win at networking when you stay top of mind in a low touch way, right? And a way to do that is to send 2 tweets a day, right? Or
100%.
post twice on LinkedIn, right? Because it's like no one would be thinking of us in that day. But if they saw my post, they'll think, right? If I'm a founder, oh, let me submit to Harlem Capital's pitch form, right? I'm ready to do that now. Or, hey, I haven't spoken to Nicole in a long time. I'd love to get her perspective on an industry, right? And so you're able to get on people's minds by sending out a mass tweet. And so I think it's, it's helped in a lot of ways. And I'm at the beginning of my career, so I think I have a different perspective. But to get your name out there for people to feel like they know you and to feel like you're top of mind all the time has helped my career in VC sort of take off in a way that I don't think I could have done without media. So anyway,
100%.
Yeah. And I think it helps for...
I've seen you just, explode on social media and people know your name. I think that's the other thing. There's Harlem Capital and then there's Nicole, and like getting to know you as a person, I think is also really important. It's not just about, oh, this company brand or that company brand, but it's like, I want to work with Nicole.
Absolutely. Absolutely. And I do think, everyone at my firm has their own lane that we sort of operate. So Jared and Henri tweet about raising a fund, right? The LP side of things. Gabby and Brandon, they talk about being sort of an operator, the 0 to 1 building phase. And then I'm sort of like the junior VC breaking into VC basics, right? And so though we have the Harlem Capital brand, which I think Hustle Fund is very similar, everybody sort of has their own niche. And there's so much power in knowing a person versus a company name, right? There's more affinity towards a person. So I think that's also a trick for founders as well, as if you're trying to build a presence, it sort of has to be from an individual. You.
It has to be you, not your company. That was actually a learning that I had at my startup, which was we were trying too hard to kind of, build this faceless brand, if you will. And then a friend of mine said, no, people don't resonate with brands. They resonate with people, especially at this stage. It's like, oh, I want to work with Elizabeth. I want to help Elizabeth. So I think it's really important to be doing things out of their own identity.
Agreed. And I was actually talking to Peter Walker from Carta. He's the head of insights at Carta, and he's like the big face of all of their data now. And he was mentioning that they tried from the Carta account to release the same exact material that they are releasing now, and it didn't resonate as well. And then he became sort of the face, and he skyrocketed. I interviewed him for this podcast as well. And now it's like, go to Peter's page, right? Go check out Peter's LinkedIn, right? But no one was doing that with Carta. So it's just an interesting case on human psychology, but makes sense. And I guess another question I have for you is, obviously Hustle Fund's mission is to democratize wealth via startups, right? Harlem Capital has a mission to change the face of entrepreneurship. And so we have very similar missions, and I think media propels that forward in a lot of ways, right? I love to demystify VC because I think people who don't have the networks are unable to understand the black box of this world. And so it's important to put that out. And so I'm curious, how do you think about your own individual media presence in pushing that mission forward?
Yeah, I think very similar to what you just described. And especially at the stage where we are, I think there are 3 things that are missing for many founders. Like, even if you're an amazing founder, I think access to capital, knowledge, and networks are fairly bifurcated. There are certainly founders, probably a relatively small group of founders who are well connected and immediately have access to those three things. They're in the right circles, they're in the know, etc. But for the vast majority of founders who are first-time founders and global founders, those three things are very hard to get access to, even if you are a great founder. So for us, like, certainly on the capital side, we have an open application process, and we have invested in about 15% of our portfolio. They are completely cold. Like, they're not referred by anybody else. Just came directly to the website. You applied, we gave you money. So we want a process on the capital side to be open and accessible to literally any founder. It could be your mom, it could be your friend halfway around the world, doesn't matter. So that's that. But I think equally important on the knowledge and network side, capital's not the only thing that matters. You have to know how to not only run a business, maybe you know everything about running your business, but you also have to know how to work the system, so to speak. I think that was one of the biggest surprises to me as a founder, which is like, actually the fundraising system is very weird. It's actually quite different from what I call regular sales. Like regular sales, you could be a good salesperson, you figure out your value proposition, you find the right customer persona, you do follow-ups, right? And with good follow-ups and communication skills, like, you can land deals. I would say that doesn't exactly apply in raising money. There are components that apply, but there's a whole game to be played around, how does valuation enter this, and who do you approach at what stage, and how do you create urgency, right? Like, all these little things in that game, they're unique. And people who don't know about that, like, would totally mess up their raise. So that is why I write a lot about fundraising. So that way, even if you are completely new, you can hopefully get some tips and tricks to improve your fundraisability. And equally, I think the last category in networks, which I think, frankly speaking, we haven't done a whole lot of for the broader startup ecosystem, but we do try to connect our founders to, whether it's to VCs or angels or even potential partners. I think all three of those things are really important, and they're not distributed equally.
Absolutely. And I think what's interesting is there's no one source for all of this information, which also makes it really hard, right? Because you try to Google it, and I think all the soft skills that you mentioned, impossible to find, right? So you could learn the ins and outs, I guess, of valuation and, metrics and things like that. But the nuances of how to approach VCs, or how does an investor think, or even just like VC fund math, right? Like, what does it mean to be a VC backable business? I think that's also like a huge one that people don't know about. And so I try to also aggregate resources for people so that it's like, I'm not the only voice here, but here's some helpful things, because even finding those is it's so difficult. And particularly for people who have historically been left out of the industry. So appreciate all the work that you and your colleagues at Hustle Fund do. I think it's really, really important for the ecosystem. One last question for you. Where did Dunk Hippo 33 come from for your username?
And Nicole, you can see the hippos in my background, although this is a podcast, no one else can. But the hippo thing is sort of a real obsession, I guess. I would say they're stuffed hippos, because I have met people who have encountered real hippos and they're like, that's scary, don't go there. But I don't know, this is one of those things where I've had my Twitter account for a very long time, and so the things that you create when you're a lot younger are not necessarily professional, and so it's just a good sort of talking point at this point. And now at this point with Hustle Fund, we've just gone off the rail and turned it into a ridiculous thing. There are now hippocorns that fly around, but you know what? I would say that we started actually creating a bunch of hippo or hippocorn images starting in the pandemic, in part because everyone was on Zoom. And as a founder, I know that going into an investor meeting can be quite intimidating. And so having that in the background just takes the edge off just a little bit. It's like, who is this lady? She's
Yeah.
a little bit off her rocker. Like, why are there hippos in that background?
Yeah.
So it kind of helps a little bit with that intimidation factor, because it can be scary to pitch VCs. And frankly speaking, I've had my share of pitching scary VCs. So we hope that people are not, not scared in coming into their Hustle Fund interviews.
I love that. I love that. It's like, we don't take ourselves that seriously. Look at this hippo in the background. Like, don't worry, it's just a conversation. It's also good. It's also good to just like break the ice. If they're like, why do you have a hippo in your background? And you're like, yeah. Let's just chat.
Nobody has ever asked me.
Really?
No founder has ever asked me that. Yeah.
Wow.
I think a lot of people probably think it, but they're probably like, I don't want to ruin my interview by asking anything controversial or weird. So
yeah, they're trying to maintain serious like attitude, but like they're probably like, what is this?
Yeah.
I love that. I love that. Well, Elizabeth, thank you so much for joining this podcast. I learned so much, so hopefully the audience does as well. But have a great rest of your day, and I can't wait to publish it.
Thank you, Nicole.